So we're going to jump right in with Fintech for Green, how technology can drive sustainability. My name is Ethan Pierce. I am your MC for the afternoon. Sustainability is one of my favorite subjects. It's one of my investment theses for my activity at Borderless Ventures. And I love anything having to do with development durable or sustainability things, so I can't wait to hear the brilliance about to come out of these amazing people. I'm going to mention them. It's Jongwoong Kim, who is the CEO of i-ESG. We then have Valerie Tiersen, founder and CEO at Green Score Capital. We have Lionel Slusny, co-founder and executive officer at Shiperise. Lorenzo Avico, Deputy CEO at LSFI, and Bonnie-Lyn de Bartok, founder at Lionel. Please give them a huge round of applause, to welcome them out on our stage. Please welcome them out on our stage. Oh, come on now. I know we can find, there it is. I knew it was in you. We got it. Please come join us on stage. Thank you.
Fantastic. Good afternoon, everybody, and welcome to this second day of Nexus 2025. I hope you have enjoyed yesterday's and this morning conferences and panel discussion. And above all, I hope that you will enjoy this one, which is entitled Fintech for Green, How Technology Can Drive Sustainability. I'm Lorenzo Avico, Deputy CEO of the Luxembourg Sustainable Finance Initiative, and I will guide this great discussion for the next 30 minutes. With today's panel, we will explore how fintech solutions are not just improving efficiency, but they are fundamentally reshaping how investors and businesses allocate resources for environmental and social good. I'm delighted to be joined by 4 leaders in this space. Valerie Tiersen, founder and CEO of Green Score Capital, Bonnie-Lyn de Bartok, founder of Lionel, Jongwoong Kim, CEO of i-ESG, and Lionel Slusny, co-founder and executive officer at Shiperise. So let's start. Bella, let's start with you. Your company, i-ESG, is specialized in leveraging digital technologies to simplify ESG reporting and decision making. What do you see as the main pain points that fintech can solve when it comes to ESG data management and disclosure, especially for SMEs and financial institutions?
Thank you. My name is Jongwoong Kim, CEO of i-ESG. So, as mentioned, i-ESG is an AI big data-driven ESG-specific data management platform company, specifically tackle like such pain points head-on. Like, one of the major challenges, particularly for SMEs and financial institutions, is overwhelming complexity and the fragmentation of the ESG data points. So that's what we would like to tackle. So like 100 of data points and ever-evolving regulations like CSRD, CSDDD, and also even we have a limited knowledge and expertise in-house. So that's fintech like us, we can solve that issue by doing like 3 things. 1, automating data collections, and also structuring the data using AI. That's part 1. So what we are currently doing, so on behalf of like businesses or financial institutions, we do a little bit of homeworks as we collect the data and on behalf, so like major regulations, frameworks, and initiative, and also benchmark data. We provide it as a database. So you as a business, without knowing what type of market requirements are, and you can simply access to it and understand what it is. And based on such data architecture, you can keep managing your ESG performance data. And then that's a great way of effective ESG management. And second, of course, delivering practical and actionable insights leveraging AI technologies. So once your data is collected within cloud and our patented AI technology comes in and analyze the area for further improvements. And then of course, it was used to be covered by the consulting company, but now you can have a better management or ESG enhancement without external sources and support. The last two, third one is kind of like a systematic approach. So maybe we can providing the cloud-based or like a scale-up tools that can be used for your immediate ESG compliance. So like, data and AI technology and also system, that's something we can just resolve the issue as a fintech. Yes.
Thanks a lot. Thanks a lot, Kim. Lionel, now to you. Your company, Shiperise, its mission actually is emphasizing and guiding investors and businesses towards projects that are not only economically viable, which is of course very important, but also super important, they are also transformative for society and the environment. So how does your platform help identifying and supporting those initiatives which align this vision of responsible innovation?
Yeah, thank you for the question. So indeed, Shiperise, we do supply chain and inventory finance. We basically address the bottlenecks in the real economy. And I think it's very important to understand and to keep in mind that when it comes to sustainability, we're talking about the real world, the real products, the equipments that also help us to have a more environmental friendly lifestyle. And so we're really talking about the entire real economy here. What we basically do is to help the brands, the entrepreneurs that are growing, to find the working capital they need to build and distribute these equipments, and for the investors to find liquid, secured investment opportunities, as well as profitable investments. So this is really where we are.
Fantastic. Thank you very much, Lionel. Valerie, your company, Green Score Capital, focuses on environmental scoring. As Bella said before, we have an issue with the complexity and fragmentation of not only ESG data, but also ESG methodologies. So how does technology help create more reliable and comparable sustainability metrics, and how do you see in which way these tools can support investors' decision?
So from a point of view, the most important thing is to clearly identify the risks to make the right decisions. So you're right, there is a lot of methodologies, and that is the reason why it is important to begin from the ground and from science. So at Green Score Capital, we use satellite data, which are unbiased data, and scientific algorithms to assess the 5 pressure on biodiversity and environmental risks that industries have to face, and what type of financial risk it could lead to, because extreme weather events, critical changes to terrestrial system, loss of biodiversity, scarcity of natural resources are the 4 main financial risks that will weigh on our economies within the next years. And we already see some financial impacts that we still consider as epiphenomenon, but it's not. $2,000 billion, this is the amount of financial losses due to extreme weather event in the recent years. And some industries had to face a huge volatility and increase in prices. I will cite 2 examples. Cocoa plus 400% this past month. Orange juice, 200%. And it will continue. Nearly 75% of the EU corporate loans are exposed to a collapse of biodiversity. So it's really important to use data from the ground. So with satellite, we can provide a clear map of the different pressures on biodiversity and ecosystem to see where are the risks, considering the type of raw materials, the type of industries, and to give a prospective vision also to see how it will be in the future.
Fantastic, super interesting, Valerie. Thank you very much. Bonnie-Lyn, your strategy is built on transforming social risks into investable opportunities. How does fintech enable you to identify, to price, and deploy capital into this social risk arbitrage strategy from the very start?
So we built a fintech engine which quantifies social risk in real time. It was a 15-year endeavor, so it wasn't easy. It wasn't overnight. How did we start that? First, it's important to understand what we mean when we say social risk. So we're in the case of finance, we're talking about operational disruption, lost time cost, model probabilities of those disruption, and pricing in that risk. So we're talking about employee engagement, we're talking about human rights, we're talking about supply chains, exploited labor, forced labor, we're talking about indigenous rights, and so on. All of which have the effect to disrupt entire industries and supply chains, and therefore markets, equities, portfolios, and so on. And so the fintech engine that we've developed is mapped all of this for the entire global equities market, 42,500 equities with good data on 14,000 of those companies with a 10-year history. Less than 1,300 of them are performant as best in class. That's how low the bar is. Those ones is our long portfolio. For the short portfolio, we have a global equities long-short statistical arbitrage strategy, which is a hedge strategy we're bringing to market in Luxembourg in the fall. The short strategy really is modeling the probability of massive disruption to any one of those sectors or companies or bad basket of equities and taking a position before the market is aware of it. This strategy is aiming at not waiting for regulation, not waiting for controversy, not waiting for disruption, but predicting it. And in an effort to do so, there is a massive alpha opportunity in mispriced risk. And we're hoping to establish a trend and disrupt the market a little bit whereby others will join us. Because as the market starts to adopt strategies like this, we change the nature of financial markets by inclusive capitalism, by addressing social risk prior to the disruption of the market. So this is, I'm going to be first. And the rest of, I created the world's first social performance index in 2010. This is the digital evolution of that project. And it correlates social management with financial returns over the long period of time. But what's left is the unexploited, the gap between best in class and repeat offenders and model probabilities of what's to come next. So,
thank you very much, Bonnie-Lyn. I'm really looking forward to the launch of your strategy, and good luck for that. Lionel, we said before that your company's mission is to guide investors towards projects that are economically viable and with a transformative character for society and the environment. Could you tell us an example or a specific case where your company channeled funding into a project with those characteristics?
Yes, I was saying we are basically financing hardware, anywhere from production to delivery to the client. So one example is Wave. It's a French company, and they developed a device that they put in hotel rooms to do water savings. And they could really reduce the water consumption up to 80% on the consumers, basically the guests. And that is a very concrete example where we could really save water, have a more responsible use of our resources in this case, and they are really, really successful. So we provided batches of up to 200,000 euros so that it could really produce in big quantities, reach the economies of scale, and basically reach their optimum markets.
Thank you very much, Lionel. Valérie, getting back to data, which is really a pain point for a lot of companies in every sector, actually. How do you ensure that the integrity of the data that fits your scoring model, and what is the role of new technologies like AI or blockchain, the role that those technologies play in the process?
Well, blockchain and AI are fantastic technologies, but if we consider, for example, first of all, blockchain, it guarantees the inviolability of the data, but it does not guarantee the confidence of of if the data is true or not. So it's important also when we collect information, for example, to also collect the identity of the source of the data, the nature of the source, certification, all documents that could provide a certain level of confidence. If not, blockchain doesn't mean nothing in terms of integrity of the data. For AI, it's the same question. So how can we ensure that the environmental indicators are really robust? So to provide this, we combined satellite data to scientific algorithms, and we compare it to the ground. So we use scientific publications, observation, to really compare if our models are robust or not. That's ensure the integrity of the data we provide.
Thank you very much, Valérie. Belle, now back to you. We all know that ESG and sustainable regulation is quite complex in general, but adding to that, your company, i-ESG, has a global scope. So you deal actually with different regulations in different jurisdictions. So how do you adapt your digital solutions to this added complexity of difference in regulation across jurisdictions, and how you help your clients stay compliant in this always evolving regulatory landscape?
That's a great question. So, and also, that is a question that I always ask, like a frequently asked question whenever we have a business meetings with organizations across the world. So, definitely, like, different regulatory landscape, it's one of the challenges in ESG sector. So in order to resolve that one, so we consider ESG as a data. So since the beginning, we've been so much focusing on setting up, like building up the data architecture, which can be agile and adaptive through like ever-evolving regulations directly into our system. For example, GRI, CSV, ISSB, CSDDD, whatever. So there are market changing like in regulations and frameworks. So if there's any changes, of course, we so far secured data architecture, which we can quickly adapt such changes. So based on the data architecture, we provide the most updated data architecture to our customers. And once data is collected, our AI automatically maps like a company-specific data to the relevant regulatory requirements, so that you can understand what kind of a jurisdiction and then also specific requirements is required to you for the a disclosure of the ESG performances. So it's basically very important for clients operating, across the borders, and also managing very complex supply chains. And lastly, we also provide the region-specific regulatory updates whenever needed. So we are operating specialized ESG data team. So they are, on behalf of you, track and monitor all the changes. And if there's any changes whenever needed, then we can keep you updated. That's what we are providing. And in order to avoid any misunderstanding, different jurisdictions. Yeah.
Thank you very much, Belle. Bonnie-Lyn, a few minutes ago you described us and explained us your process, but now could you give us an example, a practical case where actually this fintech approach turned a social risk into a concrete investment opportunity, and could you also explain how technology facilitated this transformation?
Sure. So it's important to understand what kind of data we're using So we use, all of our data falls into 3 buckets. One, company supplied information. So this is their sustainability reports, MD&A, news, government filings, and so on. So there are always signals and things of interest within that data in accordance to the rules or the taxonomy that we are following, that we're looking for performance against. Second would be external to company, not media-based, but material-based, which would be, you know, government fines, permit revocations, hospital visits, site visits. There's all kinds of information that talk about social risk. I've been auditing these types of data points for about 30 years, so I know where to go, what to look for, how to put it together. And the third is sentiment data, which is high-frequency topic tagging across millions of data sources in 49 languages and voice to text. So all of that is creating and generating signals for us. Typically, hedge funds will go in and buy, you know, data lakes like visa transactions to understand that nobody's buying red cars anymore, everybody's buying green car. So they will model the probability of where to invest next based on that information. We're not doing that. We're going into a data lake and we're cherry picking what we want against a rule base that has stood the test of time over 15 years now, that will give us a signal of performance to determine whether a company is about to underperform based on it. So an example would be, we all know fast fashion has a significant exploited labor high probability in multiple jurisdictions around the world. If we know about it before the market becomes aware of it in the news, in a controversy, we can take an action or take a position on that company in the anticipation that it will implode at some point. So in a particular case, we are simulating some pairs trading. Companies that are doing best were going long. Companies that have this probability, we're simulating using synthetic shorts, when to strike, size of position, type of tool to use, when to exit. So in this particular case I shared with you, I believe earlier, I won't name the company in case I get into big trouble, but we bought the stock at $10 and we wrote it down to $3. So with a substantial amount of investment, that's 400% return in 3 months. So that is the opportunity that the market is missing with unpriced risk. That's what the data can tell us.
Thanks a lot, Bonnie. Valerie, we have been talking a lot and read a lot and heard a lot about greenwashing. Many fintechs face skepticism around it, or simply the lack of real impact. How do you address concerns around transparency and avoid that those tech-driven ESG solutions become just a tick-in-the-box exercise?
For me, finally, it's quite simple. It's a question of money. It's not a question of box-ticking exercise anymore. I've just mentioned at the beginning some examples of financial risk, but I can give many others. I suppose you have heard about inflation in the United States due to avian flu, it's due to climate change, it's due to land conversion into agricultural production. In 3 years, 160 million poultry has been killed in the United States. 75 to 90% of flowering plants depends on pollination. How do you think it will impact the cosmetic industry or the food industry? Just to let you know, in cosmetics, they use at least more than 10,000 different ingredients. You can't pollinate this manually. It's impossible. Or you can't import hives like California already does for pollinate almond trees. It won't be possible because you need a lot of different insects to do this. And I can give you also another example in terms of natural resources. The rate of coverage of the copper demand within 5 years will be only 70%. For the lithium, it will only be 50%. So do you think you really support the good industries? Do you think you really invest in the good industries? Don't you think there is not a little bit financial risk behind? So it's really important for me to think that it's not a question of report. It's not an exercise to make it great. Oh, I'm perfect because I made a beautiful report. No, it's a question of money. And you have to take the problem now for me. And by utilizing, for example, by using satellite data, for example, it can improve the risk management by 5 times compared to other type of methodologies. So give you precise indication on what could be the financial risk, considering the type of raw material, considering the location of the site production, etc. And
thanks a lot, Valerie. Thank you very much. Bella, what are the barriers you see today in scaling those green fintech solutions? Could be it's about trust, it's about regulation, it's about access to data, or something else?
I think all of you mentioned. Yes, and then but the access to the reliable and structured ESG data is more foundational barrier in this sector, because it is really the ESG data characteristic is scattered and fragmented. It's really hard to get, and then most of the data is unstructured parts. So in order for us to use it, we actually need to convert into structured form for the data comparison, and that's the hardest part. So everybody knows that without quality data, so best AI model cannot drive any real sustainability parts. So that's the much more foundational barrier. And second thing is, one of the key hurdle is interoperability. So ESG across the different sections, different stakeholders. So many ESG efforts tend to quite siloed. But we actually need to collect the data and centralize the data in order for the effective data management. And then the financial institutions struggle to integrate their sustainability data into their key decision-making systems. That's why i-ESG, we emphasize not just analytics, but ESG life cycle data management perspective. That's how we just try to tackle such pain points.
Thanks a lot. One of the tasks of the moderator is to be conscious about time, and I see that we are almost running out of it, but I still have a couple of questions, so I will ask you to reply very shortly, because then we will wrap up with the last one for everybody. Lionel, what are the trends that you foresee in the fintech for sustainability space? What we should prepare for in the next few years?
Yeah, very important question. I think it's very important to see what happened in the past decade. And I think when it comes to data and ESG, is that ESG cannot be a free pass for, let's say, bad investment or non-profitable investment. I think we are all on this panel to show that we can do something really impactful for the world, but at the same time be very profitable. And this is also what I think we're all trying to demonstrate here. And when it comes to the solutions and the tech, it's really about having an impact and how to help the return. So tech is not an end, it's a means. And to finish on that point, the output will be as good as the data we put in. So I think here it's really about data, and interoperability. And then we will have models, AI, that will be able to harness all of that to generate profitable strategies. And this is where we're going.
Thanks a lot, Lionel. Bonnie-Lyn, you operate at the intersection of social impact and finance. And what are the main data or regulatory hurdles that you encounter in scaling those kind of strategies?
So data consistency, data quality is everybody's biggest challenge. We are all waiting for companies to disclose better information, but I really don't think that we need to. We are waiting for regulation to tell us what to disclose. We're waiting for technologies to harness it and make sense of it. But the reality is everything you need to know about impact is available. It's out in the world, millions and millions of unstructured data points. And what you need is deep domain subject expertise to structure it in a meaningful way and then quantify it systematically so that we can trade on it and make the markets work for it to change the outcome. So that's, you know, quality, consistency is at large. And I don't know that AI can solve that without the deep domain expertise. So I think expertise really is what's required.
Fantastic. So we have finished our time, but I don't care. We'll go on because I have a last one. I just ask you to answer with 3 words, no more. 2, 1. If you could implement one bold idea or breakthrough to accelerate the positive impact of fintech on sustainability, what would it be? Kim.
So like make it short, I would suggest like introducing like a standardized ESG data hub like for everybody. It's like just like a credit scores, but for sustainability. Yes.
Thank you. Valerie.
To make an environmental risk score as essential as credit score to help in every financial decisions.
Thank you. Lionel?
Yeah, have policy-based or market-based ways to put a price on these benefits and positive externalities.
Bonnie-Lyn?
And I would say scale with AI, social risk in real time for the entire global capital markets by the hour.
Fantastic, amazing. Ethan, we are done.
Yep.
Thank you very much to my speakers. A round of applause for them.
Thank you.
Thank you.
And I strongly encourage you to get in touch with them to know more about them and their companies. Thank you.